All pirates and the pirates sing. And goes my train. And goes my train. You get it all over every night. Now you get a big right supernatural from the light. Everybody was dancing in the light. Everybody here is outside, but they don't bark, but they don't fight. They keep stay light. Everybody was dancing in the
Good morning, everybody. We'll get started here in just a few minutes. Take time to look over the highlights. There's a lot of things out there that we need to pay close attention to. I think we're going to have a really, really good trading session today.
get it almost every night. But now the moon gets big, right? Natural for the light. Everybody was dancing in the dance. Yeah, feeling you dresses like a cigarette routine. When we're apart, there's no waking my heart. You're getting the hell of a feeling. I got a present to send you. Even got money to lend you. But honey, I can never ever tend you now. They're on the mountains. Message a fifth to keep. God swore I'd never drink it again. But the last little bout, I had my head pulled out. And you really want some free. And I know I'll never see it. Yeah, I got a presence to send you. I'll be in that morning. I can never pretend you're not there on my mind. Yeah, saying that you're ready to stop. Spend some time, up and live something. Well, the plans to the city and the smoking the whole head. Wound up there. It's that. Yeah, that's the same. If I can never ever pretend to you're not there on the mind. They're on my mind. You know.
Now, Red Solo Cup is the best reception for barbecues, tailgates, fairs, festivals, and you, sir, do not have a pair of testicles if you prefer drinking from glass. Hey, Red Solo Cup is cheap and disposable. In 14 years, they are decomposable, and unlike my home, they are not foreclosable. Freddie Mac kissed my ass. Red Solo Cup, I fill you up. Let's have a party. Let's have a party. I love you, Red Solo Cup. Lift you up, sing the party. Sing the party. Now, I really love how you're easy to stack, but I really hate how you're easy to crack. If a beer runs down in front of my back, well, that, my friends, is quite yucky. But I have to admit that the ladies get smitten, admiring how sharply my first name is written on you with a Sharpie when I get to hitting on them to help me get lucky. Red Solo, I fill you up. Let's have a party. Let's have a party. I love you, Red Solo Cup. Lift you up, see the party. See the party. Never seen you blue, never seen you yellow, but only you, Red, will do for this fella, because you are the abbot to my Costello, and you are the fruit to my loom. Red Solo Cup, you're more than just plastic. You're more than amazing. You're more than fantastic. And believe me that I'm not the least bit sarcastic when I look at you and say, Red Solo Cup, you're not just a cup.
All right.
Thank you, yeah, my friend. Red Solo Cup.
Great song to sing along with. Happy Friday, everybody. Good morning, everybody. Get a couple of things under that.
Solo.
Hard to turn off a good song. We need to get started. A lot of things to plan for today. Again, welcome to our live stream, live trading room. We have a lot of things going on, but kind of a recognition for some of us that are about the same age as me. You know, this last week we had, or this last week up to yesterday, we had three icons. We had Ozzy Osbourne, we had Chuck Mangione, and Hulk Hogan all passed away. You know, kind of a bummer. I mean, all of those were, all those folks were with us as we were growing up in different capacity. You know, Chuck Mangione and his trumpet played some really good music. We always remember that. Of course, Hulk Hogan uh, and Ozzy Osbourne all played their part. You know, and it was just a week ago, and when was it a week ago? They were doing a Black Sabbath concert or something, and Ozzy was in his chair. And you know, those Simpson predictions, you know, it was in 1998 when they showed a prediction of Ozzy Osbourne, um, his last concert, and they even showed the date of when he passed away, and it was exactly the same. So a lot of predictive programming going on. So kind of, if you're into that kind of stuff. Let's see. All right. So a couple of things that I want to exploit because we got to set the tone for today here. As we start the assessment of the overnight and pre-market price activity, indexes look to get a move up to a small time frame supply. Now, volume on the Dow 30 stocks is the lightest we have seen all week. And the last couple of days, when the market has been moving up, we've been getting lighter and lighter volume. Okay. The consolidation over the last day and a half, though, is somewhat concerning. Um, we could be looking at a rally-based rally or a rally-based drop. My speculation is that we're going to be looking for the drop. Now, the drop, if it is a very strong and kind of brutal drop to, to the downside, like a V-shaped pattern, anticipate that as more of a buying opportunity. Okay. The things that we have coming out next week, we have a lot more earnings coming out, but we also have things like the FOMC meeting next week. Okay. And although they're anticipating that the rates will be left unchanged, historically, the markets tend to rise starting about 5 days before the FOMC meeting and then going in and after the meeting tend to come back down. Okay. So if price gets a strong drop this morning, okay, we get that V-shaped reversal or that V-shaped drop, and then of course the reversal. We have to anticipate that over the next few days going into the Fed meeting, and this is historically, and this goes back many, many years, okay, that prices on the indexes tend to rally up going into that meeting, okay? So any strong move down on the indexes should be approached as more of a buying opportunity, whether that is today or whether that is Sunday night or Monday morning. Okay. So we've also seen that, let's see, let's bring this over here. US dollar has been moving up, and now the 10 and the 2-year yield, after consolidating a little bit, they're moving up. Okay. What should be concerning you is what the volatility index is doing. Volatility index is getting at that extreme low point. Okay, that means extreme complacency. Now, when the volatility index is low, that means that that greed indicator is getting pretty strong. Now, combine that with volume dropping off and the markets going higher, especially on the S&P and the NASDAQ, mainly of what I'm focused on. Okay. And with the lower volatility, you know, we've just had an impulse a couple of days ago, two impulse moves up. And within the last day and a half, we've had this correction pattern. Okay. Impulse, correction, and whether we get another impulse move up or we get an impulse move down, we're right there to where we could get a big price move. Okay. It's important to monitor the impulse moves versus corrections because they tend to follow each other. After an impulse, we get a correction, and after a correction, we get another impulse. Okay. Now, that doesn't tell us the direction, it just tells us that, hey, low volatility leads to high volatility, and so on, back and forth. And as we anticipate those moves, US dollar going up, we had several of the FX markets approaching a demand area. Okay. So right now, gold is in a demand zone, which also kind of plays along with the FX markets. Dollar going up, gold's going down, and so on. But we're at that potential turning point. Okay. Japanese yen is in the leg base, has not reached the fair value gap inside of it. British pound has. So we're going to place a trade on the British pound to go long, and we're going to monitor the dollar closely. We also have the Canadian dollar, which went deep into the zone. That's all right. It gave us less risk on the trade. So we are going to place trades on the Canadian dollar and British pound as we start to roll out this session. Okay. So let's come back over to this chart and let's find British pound at first. And it was trading a September contract, BPU 25. Okay. Now remember, when you're using when you're evaluating whether you want to participate in a trade, make sure you look at all the information. Is the zone in the right location? Okay. Oh, can we manage our risk? I like to keep the risk right around $200 per trade, whether I'm trading micros or minis. So I'm going to start off with one mini contract on the British pound. We've already hit my entry, so I'm going to buy at the market.
Order filled.
And I'm going to place my protective stop loss at 1.3410. 3.410. Okay. Now, as I recognize the risk on the trade, I'm at 162. So if I'm going to take a second contract, then I need to I would be over my kind of that $200 range there. Okay. Hi, Robert. Currencies do tell us something because we look at the correlation between the dollar going up, currencies go down. Okay, they're all weighted against the US dollar. Okay. We also look for correlations, US dollar related to the 10 and the 2-year yield. Okay, we like to see all of them correlated. Okay, and I'm using an hourly chart for that picture of the correlation. Okay, so great question. I use a lot of correlations as odds enhancers. As we have studied many of these things over the years, what market conditions are better to trade FX markets versus, the stock markets and so on. Okay. Okay. Oh, keep in mind, throughout this session, as soon as I get caught up here, we do have compliments of Elite Trader funding. We have two end of day evaluation to give away. So be watching and waiting for that. Also, if you're watching us on YouTube, please like and subscribe, as everybody says. And be prepared. We'll be giving away two of those evaluation accounts, compliments of Elite Trader funding, and I will get into that just a little bit more. Let's see. We had what was the other one we were looking at? We had British pound and Canadian dollar. I'm going to hold off on the Canadian dollar for just a moment. Okay. But I do want to also point out that I've already participated in gold. Okay. I got target 1 and target 2 up there. Let's just put some prices on that. Okay. Stop loss at the distal line, you might get a better entry. Okay. I've already started to participate in because it hit my entry point. Okay. Make sure you size the position properly to fit your trade plan. Okay. So don't go in and load the boat. If you have a trade plan that says I only risk $500 on a trade, well then take the $500 divided by the risk, and that'll tell you how many contracts you can trade, whether you're going to trade the micros or the minis based on your trading plan. Okay. All right. Crude oil. We're noticing that the Globex high, Globex low, that Globex range compared to the daily ATR is right in the middle. Now, generally, when that happens, we have more of a choppier basing or sideways market. Also, notice that on the daily chart, crude oil has been basing, making lower highs and relatively equal lows right on that 200 daily moving average. Okay. Now, if the 50 moving average crosses above the 200, that's going to be perceived as a golden cross. Okay. And sometimes that will be exploited and potentially getting a price movement up based on people's perception of that technical indicator. Okay. We've already been moving up for almost 2 days now. Okay. So on the smaller time frame, 60-minute chart, we've got a nice move off of that zone, and price is already in that uptrend, small time frame. Nat gas, okay, has been testing this support area for the last couple of days and has come back down to about the London Open, got a little bounce off of that. Okay. Now, looking at the Globex range and comparing it to the daily ATR, we're about right in the middle of that. Okay. The daily average true range is about 15 cents. Okay. So from the low, you can measure up 15 cents to get an idea of where the move to the upside is. And from the Globex high moving down 15 cents, you can get kind of see where that average range is and see if that average range locks in with the supply zone or demand zone. Okay. Keep in mind, we just had contract rollover on nat gas. You should be trading the September contract. Okay. And last trade date is on the 29th, which is Tuesday. Okay. So nat gas does have some predictable moves around contract rollover and around that last trade date. Okay. Right on or just before the last trade date, we often see the price moves lower as they get out of the front month and move to the back month contract. And sometimes there's some late stragglers that come in on that. Okay. So just remember each month, natural gas, crude oil do contract rollover and last trade date. And there's some very predictable moves around those times. I encourage you to go and verify and document that. Okay. Okay. All right. Let's check out. We're still taking a little heat on the gold trade. Okay. I have 3 micro contracts on that. Okay. Our exchange traded funds, IWM is up 81 cents, diamonds up 38 cents, and now the Qs have gone negative and the SPY is up 60 cents. Okay. Now this is very low volume, low activity on the exchange traded funds right now. Okay. And as we come back over to the S&P, we can look at this volume, very, very light. Usually NVIDIA has about 8 million shares traded on it. Around that, that's kind of the average here in the pre-market, and NVIDIA has only got two. So look at the Sherman-Williams, Travelers, Goldman Sachs, Caterpillar. I mean, these are very, very low volume. Okay. Now, what we need to know about the low volume is that when we look at the Dow 30 and use this as an odds enhancer, when we have very low volume like this, that implies that the volatility can be very whipsaw. Okay. Now, we are expecting a move. Well, I am expecting a move down and then a move back up in price. Okay. But before we get to that move, if we're going to participate in that move down, we do need to see price move up into our supply areas. I have those marked on our prep screen here. The NQ looking right around that 411, 23,411 to 23,422. Possibly a spike to the upside on some news or economic event. Actually, we don't have any more economic reports coming out other than the Baker Hughes rig count at 1 p.m. So this would have to be something that is tweeted out. Okay. Russell is in the supply area. We might catch it as it starts to leave. Okay. Dow also just kind of expanding that range. Now, in our recent studies, we have, and in our club, or not clubhouse, but in our community trading rooms and our Mastering the Charts recap and review, we've been talking a lot about the fair value gap inside of the leg base, okay? Now, having a leg base in the right location, as per our 5-step process, and then having that fair value gap inside of the leg base increases the accuracy of entering the trade and, of course, reduces the risk by using the distal. Now, if you're using that fair value gap, you're using the blue lines in between, which is that fair value gap area inside of a leg base, you still need to size your position properly by using the distal line of the leg base, okay? That group of candles. So even though you might enter at 64.14, your stop loss, anticipate it to be about that 64.21-ish, okay? And same with the NQ. If you're anticipating taking a short trade around that 23,411, your stop loss needs to be at the distal line of the leg base group of candles, okay? It may look wide on a chart, but if your risk is, if you have a planned risk per trade in your trading plan, okay, it's just a number of contracts that you will be trading, okay? So it doesn't matter what the risk is, that's based on your personal trading plan, okay? Everybody has different risk parameters. I like to exploit that, okay? In as much, you must have a trading plan. You must identify what that potential risk is on that trading plan, and then size the position according to that. Okay. See, often, you know, when new people start watching what we're doing here, they say, "Wow, I watched several trades work out really great. You know, I'm going to load the boat on this one." And then, you know, we do still get stopped out of trades, but if we've got to manage our working capital. Okay. Anyway, sorry to get on that rant. S&P, okay, we do have that slight upsloping channel. Looks almost like a bear flag. And yeah, we're just waiting on the NQ. So I do have the feel that we're going to be looking for a pretty strong move to the downside. Okay. And I don't want you to miss these opportunities, but I want to help you see what we're looking at and what we're looking for. Okay. Notice on the S&P here, as I bring up this example, okay, that price was in a trading range for about the last, well, I would say more than 24 hours. Okay. Now, this is not an easy market to trade when price is in a small range, even on a small time frame, just kind of going back and forth. Can be very challenging. But look at what happened prior to that consolidation. Impulse, correction. Okay. Now, after a corrective move, we have potential, another impulse move up, or we have an impulse move lower. Can be a rally-based rally or a rally-based drop. Okay. But at any rate, we have to understand those market conditions inside of after an impulse move, and we're expecting the correction, we can adjust our trading plan towards taking smaller profits during a corrected move and being a little bit more active, okay, versus an impulse move where we look to stay in the trade for a period of time, okay? Today, we're getting close to that range where we should be expecting another impulse, okay? So once that impulse starts, big price moves often yield a lot more profit potential, okay? Now, I don't know whether it's going to be a rally-based rally or rally-based drop, but we are anticipating another impulse wave or price move here in the next day or so, okay? Man, look at that volume is extremely light. We're 7 minutes away from market open. We got one Dow stock trading lower. 1, 2, 3, 4, 5, 6, 7, 8 going higher above 94 cents. 7 times 2, that's 14. S&P futures are about 10 points oversold relative to the cash market. But the cash market is trading on a very light volume, okay, which invites that volatility. Now, what I'm describing here is all the things that we have put in our pre-market tips, including the news, the economic reports, okay? What each one of these lines is something that we would be looking at from our pre-market routine course, okay? And if you have not participated in our pre-market routine course, you might be going, well, why are you monitoring so many different things? Because all the information collectively kind of helps us anticipate whether we're going to be bullish or bearish, whether we're going to have low volatility or high volatility, where we need to adjust our expectations for trend environment or short-term profit taking. Okay. Now, I don't want to just imply that you're always going to get a profit. Okay. But on a corrective pattern, okay, after an impulse move, prices are a lot more volatile. Okay. And, if you're on the wrong side of this, you can be stopped out of quite a few times. Okay. Now, if you notice the previous session was an impulse leg, and then you start going and saying, hey, we need another impulse move, can happen. Okay. But after an impulse and you start to realize that there's a corrective pattern, okay, potential correction, if you are stopped out of 2 trades back to back, okay, that can be a sign that you're in a corrective pattern, okay, and you need to adjust your trade plan to be a little more active, okay. All right, so we're still I'm sharing a lot of additional information today, some nuggets, mainly because market is quiet. S&P barely broke, it's an outside day, but it just barely broke the prior session's range, okay? And we're opening pretty flat. NASDAQ, Also, quiet trading range. We have no economic reports coming out after the open, so monitor your, ooh, there we go. We got some buy imbalances coming in. Monitor what's going on with the news. Okay. Yeah, Trump's. Boy, did anybody watch that interview with Trump going to the Fed? Powell looked really intimidated and kind of I don't want to, how do you want to say it? He looked very concerned. And you got to ask the question, and maybe I don't, hopefully I don't get banned for doing this, but ask the question, we all know that the Federal Reserve is a privately held corporation, right? It's not government. So why are we funding, or why is the government funding what, $3.2 billion in renovations in a privately held corporation? Makes you think, okay? I mean, I certainly pose the question to Doge, wouldn't you? Anyways, don't need to get into that, but that's not political. It's just we've all been told that the Federal Reserve is a privately held corporation, and we need to watch for that. All right. Market's about ready to open in 2 minutes. And we're getting a nice move on our gold trade. Okay. What else did we get into? British pound. Okay. So we have been studying this. I'm going to be doing a lot more documentation of this. I'll come back and I want to show how strong these leg-based group of candles, along with the fair value gap inside of it, they have been very, very productive for turning points. Okay. Now, entering and risk management is important, but we also have to anticipate where's the next move. Okay. All right. So let's see, where are we at here? What else did we have? We had Russell. Russell just hit. Bam. Now, what I've been documenting as well is it's kind of coming back to the set and forget. Okay. Now, since we haven't been doing a whole lot of study on where the profit potential is at, okay, we've just been entering and managing our risk on a trade. 22.75, just make sure I get the 76. Okay. On the Russell trade, we took 5 micros short. We have $46.50 at risk on the trade. And our next zone is down in the prep screen area, 22.55, 22.56 area. Okay. Let's see. All right. Back to crude oil. When you're monitoring crude oil, watch, we got a fair value gap right there at 66.02. Okay. Heating oil is a great odds enhancer. Okay. If heating oil is dropping, and it usually leads crude oil, heating oil is not dropping at the moment, so I'm not looking to get aggressive on a short trade on crude oil. Okay. Natural gas, quietly in this basing pattern. Okay. Last trade date is next week. Yeah, we've been basing right here as we just had contract rollover. Okay. All right. Anybody get the gold trade? Participating in that? Target one is 33.61 area. Target two, 33.90. Opposing zone up about 34.06. Okay. Thank you, Liz. Good to see you. Yeah, I just haven't gotten into your comment is reverse engineer the process to figure out profit targets. And I need a little more study on these particular patterns because if price coming into a buy territory versus, not a buy territory like this one up here, how do we get a small bounce out of it, or do we start to see a potential for a trend change? So there's a little more that I want to study on the entry and the risk management, and mainly on the entry. Do we get in at the top part of it? Do we get in at the bottom part of it? All of that will soon start to come out as well. Wow, nice move. All right. All right, let's see. Okay, British pound is being pretty quiet. Let's take a look over. Whoa, look at the trend. So back over to our internals, the trend shot up pretty strongly. We're getting near or at that extreme complacency on the VIX, which is, soon you'll probably see pop up. Somebody's talking about the fear and greed gauge, and they'll show that, hey, traders are getting greedy. As the markets continue higher on lighter and lighter volume, the upticks over downticks, we didn't quite reach a buy program at the open. Okay. But we're only 3 minutes into it, so we still could dip into that the buyers. Okay. Then we want to watch for the market activity after the initial open. Okay. The advancing issues over declining issues have dipped into the no trade zone, kind of being quiet. The Dow and the Russell are still, well, they were. Woo! That's a beautiful trade. Ooh, mark that one. Woo! Hey, tell me somebody jumped into that with me, huh? Beautiful. All right, what else? We got Dow. Okay. Now, I would like a better entry. I don't want to try to just do a breakout trade, but this is part of the information that we have been watching for as potentially getting a move lower. The Russell was just there earlier. Okay. Now, that's a pretty strong move on the Russell. And definitely prices could go lower, but the other indexes need to go back up to find supply. So that was a great move. So I am going to do the happy dance on this one and take the profit. Okay. Yeah, we took out the Globex low and the prior session's low on that drop. I still anticipate that to happen with that. Now, look at the accuracy of price hitting that fair value gap. Even though it was an adjusted time frame, we found the leg base, we found the fair value gap inside of it. The precision and the area is quite amazing. Okay. So I still am learning to trust this area. Okay. Even though we often see something that happens over and over again, the first 50 to 100 times of seeing it happen or watching it plays out right in front of you, right? And you stand there like a deer in the headlights just going, what should I do with this? You know? Uh, Hi, Candlestick. Yeah, over the last couple of days, we have seen those equity indexes all go in different directions. What does that lead into? I mean, if you think about it, the markets or the indexes going different directions. They've been rising on lighter volume. Okay. And this is why it's important to do a pre-market routine every single day that you're going to be participating in the markets. Let's get ready for the Dow. Dow just hit.
Order filled.
Okay. I had mine just up a little bit, missed me by it. It looks like we got 87. Okay. So I just took 5 micro contracts short on the Dow. I'm going to use the Globex high, which is the top of that leg base, 45,035 as a protective stop loss. Okay. And cancel that. So on the Dow trade right now, we have $152 risk on a trade using 5 micro contracts. Okay. Now I want to stress it's important to use the distal line of the leg base as your initial stop loss. Okay. Let's get back over to the NASDAQ. NASDAQ hasn't returned. That boy is looking weak, isn't it? S&P. Let's drop down to a smaller time frame. S&P on a smaller time frame did hit the fair value gap area, but not inside of a leg base. Okay. Yeah, I don't want to jump in on a breakout trade unless we can manage the risk, but it does appear that that the S&P and the NASDAQ will be pushing lower, but we do need to, you might have to participate in a breakout trade, which sometimes can offer a little bit more risk. Okay. The zone that I'm looking for as an opportunity to take a trade short would be if we can get if the S&P retraces back up to 64.12, 64.14. Okay. Gold's still moving. We're looking for target 1, 33.61. And we got the 10 and the 2-year yield dropping, but the dollar is kind of holding on. Okay. So now we're starting to see a little discrepancy between the dollar and the 10 and the 2-year yield. Okay. I still have risk on this British pound trade. Okay. If you're looking at that and saying, well, I don't think I want to take that risk, then simply take a smaller loss and possibly look to get back in if price should leave the area, more of a confirmation entry. Okay. Remember, every trade has risk. If you get into that trade and you start feeling like, I don't like it, if you have a smaller, you don't have to stand there and let the trade play out. Don't convince yourself of that. Take a small loss, step aside, and then watch what happens. Maybe your fears are unwarranted, or maybe they're justified. You still need to learn that based off of your trade entries and setup. Yeah, you're right, Liz. Yeah, I'm going to look for an opportunity to go long on Russell. Back down about that 22.56. Let's see if we can get a bounce off of that. Okay. I'm going to set that trade up ahead of time so I don't miss it. 22.56. Starting off with 5 micros. Initial stop loss 22.48 at 60 cents. Okay. Look, anything could happen. We could blow right through all of that. So you must have some protective stop loss. Woo, the Dow's on its way. Told you we are going to have a good Friday. Now, if the Dow can take out the Globex low and prior sessions low again, we got an unfilled opening gap. Okay. Now, I'm not turning bearish. I'm just looking for some volatility. Okay. Starting about 5 days, and this is historically going back many, many years, we have seen price move up prior to the FOMC. And you're already starting to get some wink, wink, and nod, nod, and kind of like got the impression yesterday from Powell that he might be ready to lower rates. Might be ready. Okay. So early rate cut may send these markets right to the stratosphere. Okay. See, even traders, even banks and institutions that borrow money for overnight or for trading using margin or leverage are still also looking for that rate cut so that they can make use of it. Okay. All right. Little volatility on gold. Dollar is moving up, so there is going to be some more pressure on that British pound. And what else did we have? We had Canadian dollar broke that support. Wow, much lower. Let's get this out of the way. Once it's violated, go ahead and remove it from your chart so you can clearly see where the next level might be. Okay. Swiss franc is also heading right for the demand zone. Yen is there. Nice move up on that gas. Yeah, I think I got out of the Russell way too soon, but that was a great opening. Okay. Russell is now approaching that demand zone. We're right on the quarter hour. Okay, we got another minute. Now, very often when price enters a demand zone or a supply zone on the quarter hour and up to about 1 or 2 minutes after, not before. If it enters before, you get a small bounce and then price often takes out that zone. If it arrives on time, the probability, okay, is greater that the trade will be in your favor. Okay. Now, that doesn't imply that you're going to be making a profit on it. It just shows that many times when price enters a supply zone or a demand zone on the quarter hour, we have seen the market react to that. And we've had a successful outcome. Now, in observing a couple of things, okay, I have noticed that been watching the news, okay, in watching the news, that a lot of these news services like FX Street, we got China Post, we got CNBC, we got Market Watch, they all tend to release their big their version of the story on the quarter hour. So maybe that has been why the zones have worked. Okay. I can't rule it out, but it's just something that I've started to observe. Okay. All right, we're 1 minute after, and we're just about ready to hit our demand. We just got it. Our stop loss is in place at 22.48. We have $185 worth of risk on the trade. Okay. Using 5 micros. Now, I am pointing out the risk involved in this because it is important that you kind of see my trading plan. It is when I'm doing a live stream, I try to keep all of my risk parameters right there about that $200 range. And that fits a lot of intraday traders' position. Okay. So having said that, if you want to test your skills to get a funded proprietary trading account, Elite Trader Funding has provided us with a couple of evaluations that you can participate in. We have 2 of them that will be given away, and I'm going to do the first one right now. Okay. So what I'm going to pose a question. I already gave you the answer. Okay. What is just post it in the chat if you want to participate in a $50,000 end of day drawdown evaluation account. Okay. We'll do one right now. So the question is, and the first one to type it in correctly will get the reward, and look for some instructions from the team so we can get that all to you. When I am looking for a trade, here's the question. When I am looking for a trade or enter a trade, what is the max risk I am looking to use when in trading? What is my risk? Go ahead and type that in. And the first one up would get the, oh, there you go. We've got Rose already got one. Okay. These are pretty cool. Watching these things play out. Okay. So if you're watching the live stream, let's see, anybody jump in there? Well, Ken says 2%. Yeah, we're looking at a dollar amount, which would be $200. Okay. All right. And that's why we use the distal line so we can properly size those positions. Okay. And here comes the Dow coming around the far outside. We have tested that support. We need to break that support. Once we break that support, things may be a little choppy going through this area, but we're looking for that unfilled opening gap. And then, of course, we're looking for that prep screen. Okay. So, and here comes gold coming around the far outside. So the one we're struggling with right now is the British pound. We just went long the Russell. Okay, so the Russell is taking a little bit of time. Let's see what the S&P is doing. Chop, chop, chop. NASDAQ. Wow, all going different directions. But what we needed from the NASDAQ was, the potential for the gap fill. And we also have our zone right above. Let's set this trade up ahead of time. Let's see, stop loss is going to have to be 23,412. Okay, so we're going to have about 20 some points. Okay, 23,394, and I'm going to go 395. $395. Okay, and stop loss is going to be right at the top there. I'm going to come in about that 411. All right, so all the indexes are doing what we anticipated them to do based off our pre-market routine. Okay. Information that we put out there, consolidation last over a few days, consolidation, that should have been with the consolidation. Oh, that's 2 days of consolidation. I should have put a date on that, on it. Okay. Come on, NASDAQ, you can do it. Yeah, I'm just looking across the room. Now, the dollar, the 10 and the 2-year yield are not doing too much right at the moment. Okay. Yeah, a lot of talk about tariffs, not quite done yet. Just kind of looking around. Bank of Canada holds
Order
overnight
filled.
rates. Well, we just hit. Okay. I want to quickly glance at what my potential risk is on the trade. $160. Okay. And we're using 5 micro contracts. Okay. How's the S&P? S&P getting close? Oh, we got S&P up there. I'm going to set this one out there ahead of time too. Now, recognizing that the S&P still needs to go up to supply, that means I'm going to have to take a little heat on the NASDAQ and possibly the Dow. Okay. As the S&P gets up there to finish its move. Okay. So from the pre-market, we had a great trade on the Russell, and I think we've just took the bounce off the low, showing a little green. I'm expecting a small bounce, so I'm going to go ahead and grab the profit off of that one as well.
Order filled.
Man, that was a good recording right there. We took the short, we took the long. That's pretty fancy there. And we did take the Dow right off of that line there. NASDAQ, we just got the fill. Are you guys starting to like the fair value gap areas? I mean, they're pretty cool, I think. You know, I haven't gotten this accurate. You know, we had the leg base, which kind of gave us a wider zone. They still work, okay, but the accuracy of the fair value gap inside of that leg base has just been quite amazing. Now, I am expecting to take a little heat on the NQ because the S&P has not reached an entry yet and still needs to go up in price. Okay. We're not in a zone yet. We're also seeing NVIDIA starting to get a little pop to the upside. Apple is being a little quiet. Taking a look at our large market cap stocks. Apple 46 cents, NVIDIA 57, 59. Tesla's up pretty strong. Okay, Google, Microsoft. Okay, see, we're taking a little heat on the NQ, and that's okay. And NVIDIA, even though it's up just a little bit, has just made another all-time high while Broadcom is coming right behind it. And Microsoft is moving up, but not, it's got a little ways to go to get up to the all-time high. So great trades on Dow, Russell. Trump's doing a lot of tweeting right now, or posting. So again, the more that Trump is given a wink, wink, nod, nod, you still got to wait for Powell to give the blessing, so to speak. Okay, but he is hinting strongly that Powell may be ready to reduce rates. Okay, now 1 basis point, yeah, it's worth a lot of money when the U.S. has to refinance some of its debt. Okay, so a lot of things coming into play, and it's costing the country or costing us taxpayers a lot of money. And I think maybe it was a political or a little pressure play yesterday by saying you just spent $3.2 billion of taxpayer money, okay, and you still haven't given anything back to the taxpayers. I don't know. There's a little strong arming going on, but to see his expression yesterday was pretty profound. All right. How we doing in NASDAQ? Okay. See why, I mean, it went right up to the other side of that fair value gap area, but did not violate the leg base. Okay. Dow continues to work for us. Since we're showing a profit, I am going to reduce my potential risk down to roughly about that 45,000 level. Taking risk off on the Dow trade. We now have about $65 worth of risk on 5 micros. Price has moved out of that using the size of the fair value gap has moved down greater than 2 to 1. It's time to take some of that risk off. Okay. What a fantastic trade on Russell. Crude oil. Nice little pullback. It is into that fair value gap on a 60-minute chart. But I have no hint from the heating oil that we're starting to move up yet. Okay. We do have a leg base group of candles, a zone down to 65.58, 65.40. Nat gas. Yeah, so when you're using the fair value gap, okay, you can find them all over the place, okay, but the ones in particular that we want to watch and observe when we're starting to learn about this is the ones that are located in a buy territory or a sell territory. See, this is the picture of a fair value gap, 3 candle pattern. We've got a little base candle, we got a little egg candle, we got another base candle. So the area in between is that fair value gap area. But as you looked at this, you can see that we're not in a leg base group of candles. Okay, we're not in a buy territory, we're not in a sell territory. Okay, so the risk can be a little more elevated in participating in when it's not in the right location. All right, looks like we're going to start to get that big move on the Dow. Now, if you traded one mini contract, you would be double that. Okay. So British pound back up profitable. Nice. All right, NQ is still taking the heat. But the Dow is looking beautiful. So is the Russell. Callie took the money, got her lunch money. Good morning, Callie. Well, every time you show up, Callie, we have some good trades, you know? All right. So if you do like what you're seeing here in our live stream, please hit the like button. Tell us you like it. Let us know. Um, Share it with your friends and family. Okay. Look, we do this once a week in a live stream, but we do have other classes. We have a community trading room on the Tuesday and Thursdays, and on Monday and Wednesday we also do another live um, live trading room like we're doing right now. And for what profits you are generating now could easily cover what our subscription fees are. So kind of cool, isn't it? Now, we do teach a forward-looking technique, okay? Our edge here is not to tell you what has happened in the past. I mean, we're looking at the left-hand side of the chart and we're looking for clues of where we will potentially have unfilled orders. I'm noticing over here we do have a leg base. So I want to make you aware that taking the risk off the trade, I don't have a fair value gap in there. All I have is a leg base with a candle. Okay. I'm aiming for a target at the unfilled opening gap on the NQ. Okay. That's what I'm shooting for. But in between where price is currently trading and where that unfilled opening gap is at, okay, there is a leg base. Now, 87% of the time, you're going to get a bounce off of this level. Okay. And also notice that price is arriving very late to that zone. That's another odds enhancer that price may move through that. Okay. If we were arriving and the time was right on time, the top, bottom, or quarter hour, then yes, I would be concerned about this and I would look to take a profit a little more quickly. But we're at 5 minutes after that potential place where we look for the turn. Okay. But I have to anticipate that there will be a bounce off of this leg base, a small one. Okay. Now you have to determine, is that fit your profit goals for the day? Okay. Are you there? Okay. And it's okay to take a profit. You don't have to wait like I am doing right here. I want to see it play out. Okay. What are we doing with the NQ? Wow, we stayed in the NQ even though it got really volatile up there. Okay. And S&P. Wow. S&P is really struggling. Look at all the times price came down here and hit those buy orders. Okay. Apple and Nvidia are kind of mixed. We look for more of a trend following scenario or a trending market conditions when Apple and Nvidia, two of the largest market cap weighted stocks on the NASDAQ and S&P Dow. When one is up and one is down, we get more of this choppy environment. If they're both going down or both going up, we get more easier trading environment. Excuse me. Now, Apple and Microsoft are right now competing for the largest market cap company. Okay. So we may be switching to Microsoft and NVIDIA versus Apple and NVIDIA. I'm giving Apple just a little bit longer to see if it's going to start to rise to the surface again. Okay. Be prepared for this potential strong move to the downside. Look at our prep screen zone. We have an unfilled opening gap. Okay. I really don't want to take the risk of taking a breakout trade. Okay. So I have to have that conversation. Am I going to take the breakout trade to the downside? Is there a place I can manage the risk? Or am I just going to wait till the demand zone comes into play? Okay. Now there's a lot of profit potential if the net S&P starts moving lower, as we've already seen the Dow and the Russell. NASDAQ has already triggered an entry, but we haven't triggered the entry on the S&P. We have shown a base, a drop base, potential drop, okay? But we need to find a way to get into that S&P on a smaller time frame, whereas we can manage the risk and the timing of it. So let's jump out. Oh, wow, look at that. That's not easy to trade. Imagine what those traders are going through on the S&P. And we've already had some successful trades on the Dow, the Russell, and the NASDAQ. Well, the S&P has just been really choppy and sideways. Okay. So we do have a support area. Once you have your support, look down and left. You're looking for a fair value gap and or a leg base. And we got nothing until much lower. Okay. So I'm going to drop down the time frame a little bit, find a way to manage that risk. There's my last leg base. Okay, so my stop loss will be at 64.10. Okay. Now, when taking a breakout trade, you do incur a lot more risk. Okay. My trade entry is going to be, let me just get some price range there. My trade entry for a breakout can be at 64.01 and as early as 64.03. But my stop loss still needs to be maintained up above. Okay. Now, if we look over to the left, we can see that there is a leg base up a little bit higher. Okay. That would be the best point to go short. Okay. There is a fair value gap inside of that. 64.12, 64.13. Okay.
Order filled.
So in taking the trade, I'll look to take a breakout. What I would prefer is a zone entry. Oh, look at that bounce. Hmm. Nice bounce. Okay, but that's just a leg base, leg base. It was not the fair value gap area. Yeah, good thing we got out of the Russell, took a small profit. I did get stopped out of the NASDAQ. I guess getting a little cocky here. Okay. We do have another zone just above it. But this time we will have to take a little more risk. Let's come back out to the larger time frame. There we go. Let's get rid of this one. Stop loss, be that 23,431. Take another shot at this.
Order filled.
Stop loss, 431. 432. $205 worth of risk. That's a little outside, so once I show a profit, I could downsize one, or if that's within their kind of fudge room, you can go with that. Okay. Oh, isn't that so cool how price just changes direction at that point? Gotta love that. Use the size of the fair value gap and look at a 1-to-1, 2-to-1, 3-to-1, and so on. Study the price pattern and then decide if this is, is this a type of trade we should stay in longer or just do a little hit and run? Until you have studied the profit potential part of these zones that we're using, focus on 1-to-1, 2-to-1 trades. Okay. Now you can still learn a lot. Okay. You're already seeing the entry and the risk management is pretty cool. Okay. Small risk, fits within the trading plan, sizing the position correctly. But we need to get a good feel for when we stay in trades longer and when we just do a little hit and run. Okay. So there's still more information over on the left-hand side of the chart in this area here that will give us some clues whether to stay in for a big move or just take a little hit and run. Okay. Okay, looks like our gold is moving around. NASDAQ, boy, Dow just on fire. Okay, so we got a bounce off of that. I'm going to remove that. Recognizing the leg base. We do often get a bounce off of that. Okay. I'd like to see one profit potential where we get the unfilled opening gap. Okay. That's also the 5 p.m. close of the prior session. Okay. Some traders like to use the 4:15 time. Some traders just the 5 p.m. close versus the 6 p.m. open. Okay. It's okay to use both or only use one. Okay. It's all based off of your trading plan. Our job is to point out all of these opportunities and help you understand the risk involved in it. Okay. And show you what to look for on the chart. Training the eyes is what we're doing. All right. Boy, S&P is really being stubborn here. Just got a 2-to-1 move on the NASDAQ.
Order
Order
filled.
filled.
Oh, something going on with gold. Gold went down to our next level. There it is. I've added on. I had another order down there to go long, so I am in that trade. I just increased the size. Taking a little heat on that one. Crude oil. Heating oil is moving a little bit lower, but heating oil has just hit leg base, leg base. It has given back all of that fair value gap. It's actually taken it out on the 60-minute. What's holding up the S&P? Come on, S&P. Yeah, I'm holding on to the Dow. I still believe we're going to go down, but we're just going to have to wait for the S&P to do that, to get that momentum. So if you're not in the Dow or already taking profit, then just give the market a few more minutes to get back up to that supply. British pound looking good. All right. I am going to, yeah, we got a nice little bounce off of that. So all right, looks like S&P is coming for us. Watch the time. Now, in a perfect scenario, perfect world here, price enters that supply zone in 9 minutes. Okay. Remember, as we watch the equity indexes and the time when an equity index arrives at a supply zone versus a demand zone. Okay. we start noticing that when we have successful trades, they arrive at supplier demand right on top of the quarter hour. And the other observation is that when we notice that it arrives earlier than the quarter hour, even between up to 5 minutes before the quarter hour, okay, that we get a small move out of that area and then price goes through the zone, okay? Now that's an observation. And the more that you document your observations, you become more confident to use that as part of your trading plan. So my comments about taking a short trade on the quarter hour, okay, taking that, looking for price to enter the supply or the demand zone on the quarter hour, okay, is because we have studied this over many, many months and years, okay? Kind of cool stuff. Just like we have started using the fair value gap, it takes time to study it. It takes time to watch it happen in disbelief. The first 100 times you watch it go right into a zone, like we did on the Russell, you're staring at disbelief. There's no way market's going to turn right there. How would you know that? Okay, well, the picture on the price chart showed it, and the result was a positive trade outcome. Okay. The Russell arrived on time, both areas to get a small trade. Okay. How are we doing with the Dow? There we go. And NASDAQ. Holding on to the NASDAQ. And S&P. I'd really like to not have to take a breakout. I'd rather get a zone entry. But as we have studied in our pre-market routine, if we're an outside day, we can take breakout trade. So it's not off the table. If the S&P was an inside day, and we'd expect a gap fill, we'd expect the trades to manifest a little bit later in the session, 10:30 to 11 a.m. Eastern. Okay. All right, let's do another giveaway. How about a giveaway question? Okay. So this is for the compliments of Elite Trader Funding, a prop firm out there that we've been working with. We got a $50,000 evaluation account. It's an end of day drawdown. Okay, as long as you don't lose more than $2,000 and you during that day, price things will be adjusted. Well, go and look at the rules and stuff. Okay, we're going to give away. We got our last one to give away. One $50,000 evaluation account. So the first one that can answer the question, either in our chat room from Zoom or in the YouTube channel. Here's the question. When looking for price to arrive at a supply zone or demand zone, what time do we look for it to arrive? All right. Wow. AS was quick. All right. So look for a message from the team. They will DM you to get your email so that we can send you the code for that. And you guys will be set. Yeah, I strongly encourage everybody to have a proprietary trading account. Okay. There are days that you want to not trade your money or take risk on your money, but you want to participate in trading. Proprietary trading accounts like Exchange or the Elite Trader Funding can offer you the opportunities to get past the evaluation based off of some of their trading rules as far as risk management goes, okay, and become a funded trader. Now, there are some rules and some guidelines that you need to look over when you start doing this, okay? All right. Thank you, team. Yeah, the team just put a note in the chat for you. All right. So as we're wrapping up our session, we are still, well, all profitable right now. British pound, gold, NASDAQ, and the Dow, we all have small profits on that. Okay. Let's come back, take a look at gold. All right. Not bad, not bad. Told you it was going to be a good Friday. All right, so looking at the Dow, looking at the large market cap weighted stocks, they're all kind of mixed, aren't they? Now, a price move down on the equity indexes would be welcomed and would be perceived as more of a buying opportunity. Okay. The reason I'm calling it a buying opportunity is that ahead of the FOMC meeting that's due out next week, okay, ahead of that meeting, the market tends to rise about 3.5%, 4%, okay, prior to the announcement, and then after the announcement, it comes back down, okay? So a pullback today into a demand zone would be a welcome opportunity, okay? And then we look for the markets to continue back up, okay? I mean, after all, if you were looking at back about the last 15, 20 years at every 6 weeks, 5 days before the FOMC meeting and then 5 days after, you would see a very specific price move. Now, after verifying that information, you would have your statistics to say, wow, the probability of price moving up before the FOMC and then back down after the FOMC, okay, you would have your own results based off of that. And with those results, you would then be able to incorporate that into a trading plan. So I've done the research, I've done the work. We need you to verify that information. Once you verified it, then you would start looking for the opportunity and say, you know what, if I'm expecting the market to go up and continue up prior to the FOMC announcement, then a pullback into a demand zone prior to that would be welcomed opportunity to go long. Okay. That means my short-term trading will be to the downside, looking for the opportunity to go long going into that meeting. Hey, this was a great session. It went by very, very fast. Just flew by. Please like and subscribe if you like the information, you like the little nuggets. On our website, we do have a small course that's broken down into chapters for you to learn the pre-market routine and all the information that I shared with you in there to help you make those assessments of the direction and what we had planned for the trading day. Okay. So I wish everybody a very good weekend. Okay. Get involved and have a great rest of the day. Okay. How many made some money in today's session? Can you post that in there? How many made a little bit of money today? Now, we still got a couple of trades here. All right. Wow, nice job, Callie. Well, that's only for martinis. I mean, what are you going to do for lunch? Can't just have a liquid lunch. All right. Everybody have a good Friday. Wow, shenanigans. Wow. 1.5 today. Beautiful. Well, that covers the cost of the class on Fridays, doesn't it? Glad to have you here. All right, get ready for, we're still looking for a good size move to the downside before we go back to the upside into next week. Thanks for joining us in our live stream. Everybody have a great day. And thank you, Elite Trader Funding, for providing us with the eval accounts for the students. And if you have any questions on that, just reach out to our admin team, admin@themarketinstitution.com, and we can get you set up with those. Okay. Have a great day. I will be over in a Discord room a little bit in about 15 minutes. Okay. Thanks, Liz.